Preparing for today's thought of the day has me reflecting on the fourth quarter, the end of the year, and how important numbers are. Our projections, numbers to goal, what were last week's numbers, what are next week's numbers going to be, and how did last year's numbers compare to this year's numbers. There is a quote that I have on my desk to kind of keep this in perspective for me, but I want to share a few others with you today as well. There is strength in numbers, there is safety in numbers. The numbers speak for themselves, according to my boss. You have to be odd to be number one. And my favorite quote is by Mother Teresa, and I have it on a plaque on my desk for a daily reminder. Never worry about numbers. Help one person at a time, and always start with the person nearest you.
But this was the cover of The Economist about 3 weeks ago. And the best part, as I said when I started doing these graphics, is there's the funny mix of the ideas and the pictures. Just look at the queen looking around the corner. She makes that cartoon completely. Absolutely wonderful.
He's with the Dublin Rotary, and he's also the mayor of Dublin, and I've had the honor for the last, 10 plus years, he and I are both commissioners on Alameda County LAFCO.
Thank you. Vice President Kathy.
President Jay, fellow Rotarians, and guests. This is a really special day, as some of you may not know that, but it is always a special day when we have past RI President Rick King in the house. Rick's going to say a few words, but I want you to know that Rick was RI President when I joined the club, and I heard him speak at Castlewood. And that was the first time I ever heard him speak, and I still cry. I still cry every time he speaks.
And you joined when you were 12,
I did,
right?
yes.
Sorry about that,
Let's say
Rick.
hello, Rick.
Mr. President, I am the song leader in my own club, so I always like good song leading. And I really appreciated that condensed version of the Mormon Tabernacle Choir.
Very good. Thank you. Pat?
President Jay, fellow Rotarians and friends, it's my pleasure to introduce and welcome past District Governor Dwight Perry of the Castro Valley Club. Dwight Perry was the chair of our district's Polio Plus campaign in years 2017 and 2018, and 2018, 2019. And I will have more to share about Dwight as we get on with our meeting. And I also would like to introduce Jim Bell of the Fremont Club. Jim is past president of the Fremont Club and is this year's District Polio Plus campaign chair. And have a few more words to share about Jim as well. So let me turn it back to Jim.
Any other Rotarians? Guests of Rotarians? Amazing. No guests of Rotarians. Was given a music scholarship this last year. I just love his sentence. He said, I spent the money on 1 week music theory and composition class offered by my piano teacher. How about that? Neat. He says it's very much appreciated, so we get noticed out there. That's good. All right, Pat, I think we have run the traces pretty well. Should we talk about the Polio Plus Award? And you're the MC for this.
Great, thank you, President Jay. So even though I've already given an introduction to Dwight Perry and Jim Bell, I'd like to introduce you to two very special Rotarians who are with us today to present an extraordinary District 5170 special recognition item to an extraordinary member of our club. And we're going to get to that in just a few minutes. But first, I'd like to give you a little bit more information on past District Governor Dwight Perry of the Castro Valley Club. Dwight Perry served as president of the Castro Valley Club in 1982, 1983, during the same year that Rick King was our district governor. An interesting factoid. I would also like to introduce Jim Bell. Jim Bell is past president of the Fremont Club and is our current district Polio Plus chair. Jim is also a Purple Heart recipient and served with the Airborne Infantry from 1969 to 1971. And before we get to the special recognition item I was talking about, Jim Bell is here with a special citation he would like to present to our club, and specifically to Kathy Coyle, who was our, of course, immediate past president last year.
No, it was a team effort for you last year.
It was.
You know, there's only 4 clubs out of 57 last year who got the Rotarian citation. It used to be called the Presidential Citation. And you qualified, and I would present you and your club with this beautiful.
Thank you.
So we're so grateful that both Jim and Dwight were able to be with us today. I'm going to turn the microphone over to Dwight, and Dwight has a few words to say, and I think we'll ask Brian to come up at this point too. Brian's going to give a presentation after Dwight and Jim speak. Why don't you join us now, Brian?
So what I want to do is thank each one of you in this room, the Livermore Club, joining the 1.2 million Rotarians in the world to help eliminate polio in the world. It's happening because Rotarians care. The word of the day had some numbers in it. 4.5 billion children have been inoculated against polio. Wow. That's a billion. Wow. 18 million people around the world are alive and walking today because of the Polio Plus program. The Plus is coming up with clean water, which is necessary to eliminate polio in the world. It's also sanitation, nutrition, so forth. It's because Rotarians such as yourselves care that this is happening. We're going to eliminate polio. You have members in the room like Pat, who is serving as the major donor and Triple Crown chair, excuse me, I had that wrong, the Paul Harris Society for the district this year, and doing a tremendous job, as he has done for the last couple of years. And Phil Dean, who is the major donor and Triple Crown chair for our district, who has done a tremendous job. Give this guy a hand. Phil Dean. Then you have guys like Brian Mayall, who I've not met before today, but I've heard over and over again what a tremendous job he has done in your club of talking about Polio Plus, where it's going, what it's done, so on and so forth. Your club last year donated $22,175 to the Polio Plus campaign, and that's because of Brian over here. The Gates Foundation matches every one of our dollars 2 to 1. So that's $66,525 from your club. One of the things we did last year was get a Polio Plus shirt. And it was signed by 7 past international presidents, including Richard King. And we auctioned this off. We had 2 of them, and they went for $1,500 a piece. And one of your members thought enough of Brian that he wanted to have this presented to him. So at this time, we're going to present this shirt to Brian Mayall.
All right, Brian!
Did I take my shirt off?
No, that's okay. Bring everybody out.
That too.
Thank you.
So Dwight's done a wonderful job the last 2 years and decided to retire again. So my question here, how many people ride a bicycle? Oh, great. You just volunteered. So we are this close, but we're not here yet. And unfortunately, I don't know if you guys have kept up on this, but polio has raised its ugly head in the Philippines after 19 years. We have 3 cases. They have found 4 water sources that have polio virus in it. So we still have a ways to go. So I haven't got an okay yet from the district governor, but I'm pushing them every day. I'm planning having a bicycle rally for polio. And I'm looking for clubs to create teams, and the members who do not ride, or like me cannot ride 50 or 100 miles on a bike anymore, to sponsor that team. I'm looking to raise a tremendous amount of money. I'm working with people who have put these on. I just got to get the final okay, and you will hear more, but I'm promoting it now. So see if we can get a tremendous amount of money to end this problem that we have. Thank you.
And as you all know, Rick King is here with us today, and Rick would like to say a few words, so.
You want that now?
That'd be great, Rick.
That's your handkerchief.
Pat, do you need an extra microphone up there?
Do you prefer to hold the mic, Rick, or would you like it in the holder?
Well, it's a dangerous thing to give me the mic. I'll hold it right here for just a minute. It's an honor to be at this club. It's always a great club. It's one of the best in our district. And it's a privilege for me to be living in Livermore now. We moved out here to be with our grandkids. And I was thinking of transferring clubs. But I've been 40 years a member of the Niles Fremont Club. And they threatened to sue me if I left. I'm delighted to be here with Dwight Perry, who is one of the most outstanding governors in the world and has done a tremendous job for our polio effort throughout the globe. We know that every time somebody contributes $1,000 to the Rotary Foundation, we save the lives of 4 human beings. That's a tremendous achievement in the life of most of us. I saw that one of your members was going off to Nepal. I've stayed at the Yak and Yeti there many times. They've got a wonderful group of clubs there, and I commend you for your effort at the home. That's a tremendous thing. When I listen to the projects that this club is doing, I'm impressed all over again at how much you do. I even enjoyed the thought for the day: forget numbers and save the person next to you first. That was a wonderful achievement. So I want to congratulate you on your efforts. On behalf of the President of Rotary International, the Board of Trustees of the Rotary Foundation, and the directors of our international organization from all over the world, we thank you. I remember the first time I saw a polio victim. I'd never seen it here in the United States. I was in the heart of India many, many years ago on my first of a dozen trips to India. And a boy with crippled elbows came and stood at my feet. And he looked up at me, and he knew that we were holding a little baby girl about to immunize her against polio. And he said to me in Punjabi, "My sister." And it was his sister that we were immunizing so that she wouldn't have the dread disease that he had. I couldn't understand this. Living in Fremont at the time, I'd never seen a crawler crawling down the streets in Dublin or Pleasanton or Livermore with polio. This was a new thing for me. And I watched this boy on his elbows crawl up to me and plop right at my feet. And I'll never forget him. All my life I've carried his photograph with me to remind me of my obligation. That night they put me in a guest house on the Pakistan border, and it was pitch black, very dark. And I couldn't understand why these kids were even born. Millions of them, begging, malnutrition, dying of disease before the age of 5 in that far-off grand land of India. And I was praying, and I said, Father in heaven, I know you love me equally with these kids. Why was I born in America with good opportunities for an education, for good nutrition, for good health care, for a good occupation, for a chance to live a long and healthy life? And these kids born here, I don't understand it. And it was almost as if someone had said to me, as if God himself were on my shoulder when I heard these words, Rick, don't worry about them. It was meant for you to see them. I'll take care of them. The question is, what are you going to do about it? What are you going to do about it? And I made up my mind then that as a Rotarian, I had an obligation to do something about it. So we belong to an organization that lets us do something about it. And because of that, we not only help people who might get polio, more importantly perhaps, we help ourselves. We become more human beings. We become participants in the grand scheme of life to help people. So thank you. Brian, on behalf of all of us, this guy tells me he's from England. I've been all over England.
We try to hide it.
Rule Britannia, Britannia goes away. We congratulate Brian on his tremendous work. It's a privilege for me to be here today representing Rotary International to honor your fellow Rotarian. God bless you and thank you.
Very quickly, I was going to give you an update, some numbers. And just to remind you, Polio Plus is a partner in the Global Polio Eradication Initiative, which the Rotary initiated this initiative, but it involves particularly the Bill and Melinda Gates Foundation, but also our CDC, the UNICEF, World Health Organization. And this is now a $1 billion a year enterprise. Rotary does not provide $1 billion a year, but we provide an enormous amount as the initiators of this and as the current continuing cheerleaders to eliminate polio. Al, if you just keep flicking through. So we're almost there. And we're back to numbers. In parentheses, the last year's numbers, this year's numbers. The really disappointing part of this is the continuing presence of polio on the Pakistan-Afghanistan border as a consequence of all the social disruption and so on that's going on there. I don't have the Philippine numbers here in this one. Sorry, Al, could you go back? Okay. There's also a small downside to all of this, and this is the incidence of circulating vaccine-derived poliovirus. As I told you last year, the poliovirus is live, and like anything that's live, it can mutate, and it does occasionally mutate. And these cases have been entirely in countries that have been previously free, but they come up, and particularly in Africa. That's why we're changing over to the dead injectable virus, which is much more difficult to give. And you have to train people, and a large amount of the money at the moment is going into training populations to use needles to inject the live virus. Okay, Al. So why should we carry on? we're not there yet. We keep being just that far away, I think. So we really have to complete the task. And remember, RI, the Rotary International Foundation, plays this leadership role in the GPI. The plus gains is an enormously important part of this. It's not just polio. And in particular, there's been the elimination of vitamin A deficiency, which causes blindness and have been responsible for up to 500,000 kids dying each year of blindness. Okay. So the world really does need continuing inspiration from the Rotary International Foundation. But just as importantly, I think the Rotary International Foundation needs support from the clubs. They need to know that we are behind this program, that we believe in it, and that we feel that working together, we can achieve our goals.
Thank you, Brian, and congratulations again. Well, we almost made my 1 o'clock liftoff time. Not too bad. I have one more very important thing to do. Would James Goodhart come up here, please? James.
Oh, yeah. Here we go.
Oh, yeah.
Okay, that's nice.
It took him a while.
James, I am delighted to give you your blue badge.
Yeah.
You have come to Rotary. You have come. You have become a member, and you've earned a spot in our hearts. Thank you so much. All right, Jacob, would you come introduce the speaker for the day, whom I think you know a little bit. All right.
Thanks, Jay. Fellow Rotarians, it's my pleasure to introduce our speaker today. His name is Steve Nelson. He's the CEO of Capital Insight Partners, a financial advisory and money management firm based out of Scottsdale, Arizona. Steve is also a chartered financial analyst. A little bit of his background: he's a former trustee of the Phoenix Art Museum, served on the boards of the CFA Society of Minnesota and the Catholic Community Foundation in Phoenix. His undergraduate degree is from St. John's. His MBA is from the University of St. Thomas in Minnesota. St. John's honored him with a presidential citation in 2008. Steve's wife, Chris, is a veterinarian and author of 2 books, Coated with Fur and A Vet's Life, and A Blind Cat's Love. Please welcome Steve Nelson. And one last thing, he's also a Knight of Malta. Thank you.
Sir John Templeton was one of the great investors of all times. And he spoke to a group of my peers, chartered financial analysts. And this is what he said to us. He said, "You are the ones entrusted with guiding people out of the attitudes and fears of the poor and into the confidence and security of the truly rich in mind and heart." So hopefully, in the short time we have together today, I can impart some of that. This is why our firm exists. As Jacob said, we're based in Scottsdale, Arizona. I want you all to know I was thinking of you at 4:30 this morning as I was getting out of bed and looking to catch a flight. It's really a delight to be here. Jacob's told me about your group for a long time, and it's really a thrill for me to be here. But this is why we exist. Freedom to live an inspired life. We know that if we give people, if we are good stewards of people's money, we give them that freedom to go live an inspired life. So let me start with this picture, which is more the long view. I want to give you some context because I do think it'll give us all some freedom, some peace of mind, and maybe some hopeful perspective on where we are in the economic cycle and where we may be headed. So this is the S&P 500. This is the U.S. stock market. And we all like to think that history changes all the time and that each generation is so different, but do you notice some patterns that tend to repeat through time? The stock market tends to go flat for a while, and then we get a 20-plus year up run, generally speaking, and then we go flat, and then we go up. Here's the great news for all of us in the room today. This bull market started in 2009, so we're only 10 years into it, and if historically, there's no guarantee that this moment in time will repeat history, but if it did, we're maybe only halfway through what should generally be a pretty good cycle for growth assets, whether they are stocks or real estate. Now, surely in those up years, you do get some recessions and you do have some down years in the market. But generally speaking, frankly, this is our perspective on where we are in the long cycle. So that may not have been what you expected to hear when you came in today, and we're going to talk a lot more about the immediate near term, but I wanted to give you this longer term context. Part of the reason for hope is all of you and Rotary, when I hear what you're doing with polio, it's absolutely remarkable. So as a fellow American, as a citizen of the world, I really thank you for what you're doing. Jacob mentioned that I'm a Knight of Malta. The Knights of Malta, the Knights and Dames, have been around since the 10th century, if you can believe it. And we serve people that we refer to as our lords, the sick and the poor. So your work in polio really speaks to us. I have the great privilege of working with a lot of investment advisors around the country. I can tell you Jacob is one of the best that I get to work with, and he's really a treasure, I'm sure, for your club, but also for the community. If you like the kind of information I'm presenting today, and you want to go deeper into the economy and the markets, Jacob and I will be appearing at the Marriott in Pleasanton in January to go deeper into this kind of topic. And if you don't like it, then I guess we won't see you then. Let's come back to the near term. Okay, so I gave you the long-term perspective. We think, generally speaking, we're only halfway through this upcycle in the economy. But let's look at the near term, okay? Now, we know that after a recession, things begin to recover, and then we enter that green zone. And we would tell you that we were in the green zone, which is growth in GDP, and in fact, accelerating growth. So it's not only growth, but actually accelerating. We felt that we were there in the American economy until about the third quarter of 2018. Do you remember things were pretty good last year until the fourth quarter, and then the wheels kind of came off. And a lot of that was induced by the Federal Reserve. So we feel that starting in the fourth quarter of last year, we transitioned from that green zone to the yellow. And what that means is that we're still growing. GDP is still positive. I think any of us that have the luxury of traveling around the country know that things are going pretty well right now for most parts of the country. But that growth is slower. It's not quite as fast as it was. And the million-dollar question is, are we going to dip into red, meaning a recession? Or are we perhaps going to just skirt along the bottom before we find a new leg of growth? And that's our firm's view of what's going to happen. We actually believe right now we are in a bit of a slowdown, but that by the second quarter of next year, it should pick back up. You say, why would you say that? Well, when we look at companies, stocks that we invest in a host of different industries, we look at their own histories, we talk to the company managements, we try and read where they're at in the cycle and what they see coming down the road. It just appears in aggregate that the U.S. economy should pick up in the second quarter of next year. In fact, the CEO of Knight Transportation, just to give you one example, said this very thing just a couple of days ago. Knight Transportation is the largest trucking company in America. And he said by the second quarter of next year, they kind of forecast a pickup. So that is our view. It is possible, of course, that something could throw us into a recession. But we just don't see it, and I want to give you some evidence for that. First of all, GDP. This is where we are. And when you look at that kind of gray line, you can see GDP is actually tracking a fairly normal historical range. This current recovery is a little bit low. This expansion average has been 2.3, and normal is 2.7, but you get the point. earnings quarter by quarter and GDP growth have been pretty solid. So it's hard for us to suggest that we're going to have a recession imminently. Recall that the definition of a recession is 2 consecutive negative quarters of GDP. And even if we get one, our firm doesn't believe we're going to get 2 consecutive in the next 6 to 9 months. In fact, again, our view is things will pick back up as we get into next year. So GDP is pretty solid. Then let's take a look at the consumer. And I'd like you to focus over here, please. The consumer, it is said, is 2/3 of the economy. Now that overstates it a little bit because the business to business part of the economy should get more recognition than it does. But we'll look at business in a moment. Let's start with the consumer. Consumers are in great shape. Right here, our debt compared to 1980, our debt has come way down. So Americans got some religion back in 2008, 2009, 2010. We've tightened our belts, we've paid down debt. Of course, the low interest rates have helped this tremendously, but the consumer is in great shape. And in fact, you see it on the bottom right-hand side, net worth is at an all-time high. We know that we have record low unemployment, and isn't that great? We should all celebrate that. We know that wages are beginning to rise a little bit. I mean, I'm privileged to work with clients in 26 states, so I'm on a lot of airplanes, and I can tell you all the planes are full. Now, some of that is because Boeing isn't flying 737 MAXs, but I tell you, it doesn't matter where you go in the country, whether it's Florida, Atlanta, the East Coast, the Midwest, out here on the West Coast. I mean, the economy is really solid. And I think it's great news and pretty hard to articulate, therefore, that a recession is imminent. Let's look at the business community. So the consumer's in good shape. How about business? Here's S&P 500 earnings per share, doing very, very well. Margins are also very strong. Now, of course, things always look bright right before we fall off the cliff, but we just don't see that in the current situation. So if the consumer is good and the business is strong, and I would argue that we have a mayor here, most cities and states and counties are doing well. The only real fiscal basket case in our country, of course, is the federal government. And I should go back to that very first picture I showed you. You know, our view personally is that in the decade of the 2020s, things will be pretty good. We'll be in that generally bullish market, growing economy. We do honestly worry about a Great Depression in the 2030s, depression with a D. But there's a lot of money to be made between now and then, so let's focus on the 2020s, okay? All right, so the consumer's good, the business community is good. How about the stock market? So this is S&P 500 price divided by earnings. It's one way we measure, is the stock market too expensive or is it still cheap? And you can see that it's really neither. Right now, it's just fine, though. It's not at such an elevated value of the stock market that we would expect overvaluation to be the cause of a big calamity. The reason the price divided by earnings ratio is kind of tracking at an average, normal kind of level is frankly because the earnings have been so good. The prices of the stock market have been going up for 10 years, but so have the earnings. And so we're in an okay place as far as the valuation of the stock market. Another component of this is when we have very, very low interest rates, you know, that allows us to justify mathematically a higher price earnings ratio than we normally would. So the consumer's fine, the business community is fine, most city, state, county are good. The stock market isn't overvalued. We really think you should be a little bit more optimistic than pessimistic right now in the economy. I also want to offer a comment about the longer term. You know, if you think of it, these young millennials that we talk about, the people aged 21 to 38, think of what a gift they are getting as they kind of had a failure to launch, but now that they're starting to get married, get houses, all those things, think of what a gift they're going to have buying their first house at these low interest rates. A lot of you, I think, bought houses and probably paid double-digit interest rates, right, when you bought a house. So that'll be a real gift, and the millennials outnumber the baby boomers. So they really are going to be a big economic force that should be a good positive force through the decade of the 2020s. Now, one of the things that really tends to mess up investors isn't so much the math, it isn't so much the economics, it's our emotions. And so I wanted to put this picture up because I think all of us as Americans are feeling an awful lot of push and pull in the world and in our country and in the news flow every day. And what's supposed to happen is we're supposed to follow a nice orderly pattern where after a recession we begin to get optimistic, then enthusiastic, and eventually euphoric, and then of course it all sort of heads down to panic, capitulation, despair, and then we come back up. I was trying to think as I was preparing for today, where are we in this cycle? And to be honest with you, we've had this little bit of a slowdown the last couple of months in the economy, but again, the economy is still growing. So my best guess is we're kind of somewhere in here. What happens to most investors, of course, is when we get up here and the market's been great for a whole long time and everybody's quitting their job because they know how easy it is to go be a day trader of stocks or flip houses here in Northern California. I'll never forget, my wife's a veterinarian. She had veterinary technicians telling her they were going to quit being veterinary technicians so they could go flip condos in Phoenix because it was so easy to make money. And of course, that was right about the top. The problem is people get too greedy up here and they get too fearful down here. And I just wanted to remind you that this is how the human brain is wired, and please don't act that way. Up here, you should be very fearful when everyone's very excited, and down here, you should be very excited when everybody's very afraid. Right now, I think there's enough concern in our country and around the world. We have the tariff issue, we have the Brexit issue. I mean, there's a host of issues, right? So I don't think anybody could make the case that Americans right now are feeling here, which is typically, again, a sign of a market top. So I hope in a very brief presentation, I've given you a little bit of confidence because we do believe there is some money to be made the next couple of years. It is our view that the next recession will be mild. It'll be mild because, again, consumer business are in such good shape. We think it'll be fairly brief, and we believe it will come in around 2022, near as we can tell. But one of the things that you need to know is this. So please recall that everything I just told you can be dead wrong, and I thank you very much for having me.
It's in your graph of the Standard & Poor 500 in 2017, there was a drop and a flattening out. No, not that graph. Well, right there. Okay, look at 2017. Flattens out, okay, and a drop. How come?
In 2017, because of earnings, I would also say there was probably a little concern about interest rates and what would happen in the country, but I think generally speaking, I would say a lack of confidence. A lot of the market is built on confidence, whether people feel good or don't feel good about their own pocketbook, and to us, that was part of it.
So you think it's all just emotion?
In that case, yes. To us, and you have to understand, every investor is different, and there are a lot of different ways to succeed as an investor. Our approach generally is to be very long-term oriented, except when you don't want to be. What I mean by that, if I can go back to that picture. Okay, so again, there are times in the market, we believe, in the market cycle, like right here to right here. That's kind of where you want to be a surfer. You just want to get on the board and ride the big wave. And again, right now, we believe we're in one of those times, basically since 2009. There are other times from 2000 to 2013 where the S&P return for 13 years was 0. You can see it there. You ended up in 2013 where you started back in the year 2000. The idea being in that kind of a market, the only way to protect capital and to grow it is to sell, to buy, to sell, to buy. Very different from one of those long cycles where you want to buy it. And we didn't get that concerned about 17 because we were still believing we were in that long boom.
Are there any particular sectors that you would be recommending right now?
Great question. The question was, are there any particular sectors that you would recommend? Right now, what's worked for us this year has frankly been diversification, a focus on high quality, a focus on high conviction names. But if we want to talk about sectors specifically, I think you can find a lot of value in the very beaten down energy sector. It has underperformed for a very long time. I think I was looking at Exxon yesterday. It had a 5% dividend. It's unbelievable. And part of the reason, by the way, that stocks are doing better than bonds, I mean, bonds have had a good year as interest rates have come down, but part of the reason we're still fairly bullish is a concept that's very complicated. I know some of you are from the lab, but I'm sure you can follow me on this one. The concept is, are you ready? This is not advanced physics, but bear with me. Tina, yeah. There is no alternative. I mean, who wants to buy a 2% 10-year treasury? You can get 5% on Exxon's dividend, you can get 2% in the S&P dividends, right? And you have some upside for growth. I think that also gives us reason to believe this equity market should continue for a while longer. Yes?
So we're in the Bay Area where we have housing prices that are kind of through the roof.
Yes.
I'm also very aware that we're in a period where wealth inequality continues to divide so that the top 10%, in fact the top couple percent have, worldwide, there's a huge wealth inequality. And so this is lovely, but it doesn't strike to the problems that I feel that I'm dealing with as a citizen, as a member of city council, and as someone who lives in the Bay Area. Where, by the way, millennials aren't real happy and not real, nice to have low interest rates, but if you can't afford to get into the house, doesn't actually help. How do you think about that, or is this just not an area that you deal with at all?
Great set of questions. And obviously I spoke in big generalities about the millennials. Every situation is different, and certainly your situation in the Bay Area is somewhat unique in the country, I would argue. The scarcity of land, the high housing prices, et cetera, is really difficult. And of course, I live in Arizona. We are seeing a lot of people move from California to Arizona for that very reason. There will be a lot of wealth inherited in the coming years as the greatest generation and the baby boomers begin to die. But that isn't going to solve these problems immediately. So I don't really know how to answer the question other than to say in aggregate across all of America, I do believe the millennials will do well and have a great economic impact in the next 10 years. And then I do believe, and I do want to underscore this, in the 2030s, my fellow Americans, we are all sunk. Because the federal government is spending money like a drunken sailor. And we are all going to pay the price for that. But not for about 10 years. So let's go make money while we can.
Question. This chart, you refer to a 20-year growth period followed by a 10-year flattening. Is there a theory behind this? Why is this cyclical?
Yes, great question. We would argue that it's because every generation has to learn these lessons for themselves. And what I mean by that is this human emotional cycle. We all go to great excess, we overbid things, and then of course the economics don't support it, so it collapses, and then everybody says, I'm never going to invest in stocks again, or I'm never going to buy real estate in Arizona again, or whatever the issue is. In the 1600s, if you can believe it, it was tulip bulbs over in Holland, right? We all learned that as stock people. My point being, every generation kind of has to learn that things cycle. And unfortunately, we tend to have to learn that the hard way by losing money. So that's why I think the cycle, that's my explanation of why the cycles take so long. Yes.
How do tax code changes affect this?
Yes, well, there's no question that taxes have an impact. I would tell you that, and maybe this will be comforting to everybody, I think the economy is bigger than the politicians, praise God. But politicians certainly have an impact, and certainly tax has an impact. I think you can look at the most recent presidential election. When Trump came in, there was a sense that maybe the regulatory burden was going to be lowered, maybe the tax burden was going to be lowered, and it sort of unleashed some confidence in the business community to go invest in property, plant, and equipment, and labor, and some of those things. So at the margin, it certainly has an impact. On the other hand, if we study history and we look at these long cycles, you've had great periods under Democrats, great periods under Republicans, and you can kind of say maybe the economy's a little bigger than what Washington is doing or Sacramento or whatever.
You mentioned the R word, regulations.
Yes.
And we had issues in 2009. It was blamed on no regulations. Then we got regulations, and so now they're deregulating again. And so, what's your opinion on regulations?
Well, remember, I'm from Arizona, so we like guns. No, we like less regulation, right? I do believe, I do fundamentally believe, this is just my personal view, you may disagree, but I'm a limited government, small government. They should only do what they must do, that the rest of us can't do. I do think at the margin, it certainly makes a big difference in economic growth, but that's just my personal view. So, by the way, my battery went out on my watch, so somebody will have to stop me when it's time to. Yes.
Right.
2 minutes, okay.
Yes, I'm interested in your outlook on energy, given the climate issues and the negative publicity toward gas and oil. And are you talking about sun, maybe? I think it's going to have a big impact. Not only that, but a lot of the large banks are being advertised as being major investors in oil, and that people are taking their investments out of those banks. So how can we really feel confident in investing in something that we don't really like?
Right, exactly. Oh, there's no question the very long-term trend, and it kind of goes to, I think, your question about millennials. We're eventually going to move away from fossil fuels, right? There's no question. We have to. But here's the thing. If you look year by year by year, up through today, oil demand has grown worldwide every year the last many years. So demand is still growing for oil and fossil fuels, even as we fortunately develop these more sustainable approaches. I was talking to your greeter Irv before we started from the lab, and he was telling me about the project they're working on there. And he said, this is going to be a great project. We're going to be able to turn seawater into energy. He said the bad news is it was always joked in the lab that it was a 30-year project, and 30 years in, we still think it's another 30-year project. So that's the problem. But definitely, you're seeing it. Certainly in California, you're a leader in it, but even in Arizona, you're seeing solar and wind and all these others come, and of course the millennials will embrace that. But in the meantime, the question was right now, what would you invest in, what sector? And right now, I think oil looks cheap. We still like growth stocks, so that leads you back to the Bay Area here and the innovations you're creating in technology. Healthcare, I think, has some good possibilities. Anyway, I just want to leave you again with the final disclaimer, because it is really important to keep in mind everything I've shared could be dead wrong, but I hope that it was helpful at some level. Thank you very much.
You have to make a hard choice. Part of this depends upon when you get on